Cryptocurrency market has become one in all the most important growing investment sector within the world in recent years, attracting a huge number of investors around the world. From Bitcoin and Ethereum to Dogecoin and Tether, there are thousands of different cryptocurrencies, which can make it overwhelming when you're first getting started in the world of crypto. This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we will dive into the 3 crypto altcoins to buy before January. Altcoins are cryptocurrencies other than Bitcoin, BTCUSD. They share characteristics with Bitcoin but are also different in other ways. For example, some altcoins use a different consensus mechanism to produce blocks or validate transactions, or they distinguish themselves from Bitcoin by providing new or additional capabilities such as smart contracts or low price volatility. As of November 2021, there are over 14,000 cryptocurrencies. According to CoinMarketCap, Bitcoin and Ether alone accounted for nearly 60% of the total cryptocurrency market in November 2021. Altcoins made up the rest. Because they're often derived from Bitcoin, altcoin price movements tend to mimic Bitcoin's trajectory. However, analysts say that the majority of cryptocurrency investing ecosystems and the development of new markets for these coins will make price movements for altcoins dependent of Bitcoin's trading signals. So without further ado, here are the 3 crypto altcoins to buy before January. 1. Cardano or ADA. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction with Cardano than with a large network like Bitcoin. This means transactions are faster and cheaper. Cardano also claims to be more adaptable and more secure. It consistently improves its development to stay ahead of hackers. Somewhat later to the crypto scene, Cardano is notable for its early embrace of proof-of-stake validation. This method expedites transaction time and decreases energy usage and environmental impact by removing the competitive, problem-solving aspect of transaction verification present in platforms like Bitcoin. Cardano also works like Ethereum to enable smart contracts and decentralized applications which are powered by ADA, its native coin. Cardano's ADA token has had relatively modest growth compared to other major crypto coins. In 2017, ADA's price was $0.02. As of October 29, 2021, its price was at $2.01. This is an increase of almost 10,000%. But before we proceed on to the next crypto altcoins to buy before January, like this video, smash the subscribe button and click the notification bell right now, or else you'll have no time to check what are these crypto altcoins. 2. Theta. The Theta blockchain is a decentralized infrastructure that seeks to improve video streaming and delivery. Companies or websites providing video streaming content have traditionally kept it all in one centralized system. While this may be convenient at first, if enough viewers try to access the content all at the same time and put pressure on the system, the stream can become slow and choppy. To remedy this, streaming providers will offer a content delivery system in which they disperse a group of servers so viewers don't push as much stress in one single access point, ensuring a smoother stream. But this can be costly. Theta blockchain is seeking to disrupt this model by essentially setting up a peer-to-peer network that taps into people's computers to utilize their unused bandwidth. Now, when someone attempts to view content that is available on Theta network, some of the data powering that content will come from the main server hosting it, while some will come from the Theta network. Additionally, Theta has made several big partnerships. For instance, Samsung plans to include the Theta.tv esports streaming network in future Galaxy S20 smartphones, and also may bring other Theta-powered content platforms to its own smart television platform. Major companies like Sony and Creative Artists Agency are also backing Theta, as well as several venture capital firms. And lastly, we have 3. Solana. The Sol token began trading in 2020 with its own blockchain, the ability to integrate with tokens from other networks, and fast transaction speed. These attributes are seen to be well suited for high-throughput decentralized finance or DeFi solutions. Over 500 dApps are built upon Solana by independent developers, most being related to finance such as lending or borrowing. These applications that provide DeFi services, trade NFT tokens, or even find a dating partner need Solana tokens to transact. Solana has taken the crypto world by storm, starting 2021 with 0.01% of the market and soaring to a top 10 crypto by market cap by September, giving its main competitor Ethereum a run for its money. Solana price dropped below $200 as billions were wiped off the total market capitalization on Black Friday. The altcoin price is currently on a downward trend, and analysts expect a trend reversal. Over the past week, over $43 million flowed into Solana from institutions. Whales have continued accumulating the altcoin through the dip and have a bullish outlook on Solana. 65 wallet addresses hold over 1 million SOL tokens, amounting to a total of $31.3 billion. Solana ownership is concentrated. Therefore, whale accumulation implies an upcoming price rally in the altcoin. Are altcoins good investments? The market for altcoins is nascent. It is an unequal pairing. The number of altcoins listed in cryptocurrency markets has rapidly multiplied in the past decade and attracted hordes of retail investors feverishly betting on their price movements to amass short-term profits. But such investors do not have the capital necessary to generate sufficient market liquidity. Thin markets and an absence of regulation produce quicksilver volatility in altcoin valuations. Consider the case of Ethereum's Ether, which reached its prior peak of $1,299.95 on January 12, 2018. Just several weeks later, it was down to $597.36, and by the year's end, Ether's prices crashed to $89.52. Yet the altcoin reached record prices of above $4,750 just 2 years later in November of 2021. Time trades can provide traders with a wealth of profits. Therefore, the altcoin market is for investors willing to take on the outsized risk of operating in an unregulated and emerging market that's prone to volatility. They should also be able to handle stress resulting from wild price swings. For such investors, cryptocurrency markets can offer great returns. Discussions about the future for altcoins and indeed cryptocurrencies have a precedent in the circumstances that led to the issue of a federally issued dollar in the 19th century. Back then, there were various forms and types of local currencies circulating in the United States. Each had unique characteristics and was backed by a different instrument. For example, gold certificates were backed by deposits of gold at the Treasury. U.S. notes used to finance the Civil War were backed by the government. Local banks were also issuing their own currency, in some cases backed by fictitious reserves. That multiplicity of currencies and financial instruments parallels the current situation in altcoin markets. There are thousands of altcoins available in the markets today, each one claiming to serve a different purpose and market. Well, altcoins are good alternatives to cryptocurrency market investors interested in diversifying their portfolios. Though some, like Ethereum's Ether, are recognizable by name, a majority of more than 10,000 altcoins out there still have yet to make a mark. Altcoins are representative of the potential for cryptocurrencies to reshape modern finance, but investors should do their research before investing in them. The risks associated with altcoins are similar, or in some cases, greater than those for Bitcoin investing. Cryptocurrency is digital money that isn't managed by a central system like a government. Instead, it's based on blockchain technology, with Bitcoin being the most popular one. As digital money continues to gain traction in Wall Street, more and more options become available. There are currently more than 5,000 cryptocurrencies on the market. Many investors may be wary of risking investment in blockchain due to the technology's association with the volatile cryptocurrency market. However, blockchain is not the same thing as cryptocurrency, and blockchain ETFs invest only in stocks of regulated companies, many of which are big blue-chip technology firms and not directly in cryptocurrency. For investors looking to diversify within crypto markets, altcoins are an inexpensive way to expand their horizons beyond Bitcoin. Rallies in cryptocurrency markets have produced returns that are multiples of those produced by Bitcoin. But there are risks involved in altcoin investing, not least of which is the absence of regulation. The maturation of cryptocurrency markets will likely bring more sophistication and capital into the industry, paving the way for regulation and less volatility. Are you planning to invest in crypto altcoins? Let us know your thoughts about this video in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.